Welcome to lecture number 29. In lecture number 29, we'll do the concept of standard cost. Now, standards are everywhere around us. For example, we can say that when we talk about standards in business, so we have, accounting standards related to different fields of accounting. Then we also have government standards, which are called regulations. जैसे आपका we have regulations related to the labor rate, कि labor का per day, what should be the minimum wage. So these are all regulations which are in fact standards which people have to follow. Standards established internally by a company may extend to personal matters such as employee absenteeism and ethical codes of conduct, quality control standards, etc. When we talk about standards in managerial accounting, so the standard costs are predetermined unit costs which companies use as a measure of performance. We will focus on manufacturing operations in this chapter, but you should also recognize that standard costs also apply to many types of service businesses as well. For example, when you go to McDonald's, so McDonald's में they know कि जो वो raw material that which they produce उसकी क्या cost है. For example, what should be the cost for pickles, beef, buns, and etc. And what is the labor which is related to which is incurred when you're making, let's say, one hamburger. So they know how much they will end up incurring in form of cost, and then that cost is considered as the standard cost. Then what they do, they compare that standard cost to the cost which actually they had to pay for to find out the difference. Distinguishing between standards and budgets. Both standards. Now we have to distinguish between the standard and the budget. What is the difference between standard costs and the budget? Both standards and budgets are predetermined costs and both contribute to management, planning, and control. There is a difference, however, in the way the terms are expressed. A standard is a unit amount, a budget is a total amount. So we can say that the when we talk about the budget, so budget is, the unit cost multiplied by the total number of units that you intend to produce. So that is called the budget. And when we talk about the unit cost, that is always the standard cost per unit. Thus, it is customary to state that the standard cost of direct labor of a product is, say, $10. If the company produces 5,000 units of product, the 50,000 of direct labor is the budgeted labor cost. A standard is the budgeted cost per unit of product. A standard is therefore concerned with each individual cost component that makes up the entire budget. So, what does this paragraph mean? It means that when we have to make a budget, so we always have to start with calculating the cost per unit. Once we know the cost per unit, we can calculate it with the intended number of or quantity of output, and then through that we get the budgeted cost for either that direct material or for the direct labor. There are important accounting differences between budgets and standards. Except in the application of manufacturing overhead to jobs and processes, budget data are not generalized in cost accounting systems. In contrast, standard costs may be incorporated into cost accounting system. So when we have to generalize, when you are making, the transactions a part of the accounting system, so you never use the budgeted figures, though we can use the standard figures. For example, आपकी inventory है, so that inventory can be measured using the standard cost, but it should never be measured using the budgeted cost. Why standard cost? Standard costs offer a number of advantages to an organization as shown in illustration 23.1. For example, it facilitates the management planning. Management knows what cost will it incur. So accordingly, it can, foresee what sort of output should it have, what sort of raw material it should be purchasing. Then you have promote greater economy by making employees more cost conscious. As you know, when you tell employees this is the total labor uh, that should be incurred while making one unit. So employees will always have that in their mind, what sort of performance, what sort of um, output they have to give in order to meet that per unit cost. Then it can also be useful in setting selling prices. Then you have contribute to management control by promoting basis for evaluation of cost controls and etc. The organization will realize these advantages only when standard costs are carefully established and prudently used. Using standards solely as a way to place blame can have a negative effect on managers and employees. It means that you should try not to thrust the standard cost that you have calculated on the employees. They should, take it as a challenge rather than they should taking it as a problem. Or second, dismiss the very important managerial practice is that you should also reward the employees that meet those standards. Now, how do you set the standard cost? The setting of standard cost to produce a unit of product is a difficult task. It requires input from all persons who have responsibility for costs and quantities. To determine the standard cost of direct materials, management consults purchasing agents, product managers, quality control engineers, and production supervisors. So when you have to calculate the standard cost related to direct material, so you take feedback from a variety of departments and a variety of people in order to come up with a figure that is realistic and correct. And when similarly, when we are trying to figure out the labor time requirements, we should always, talk to the payroll department, जो आपके industrial engineers हैं, uh, direct जो managers हैं who deal with the labor, to get feedback from all of them in order to come up with a realistic and correct figure. To be effective in controlling costs, standard costs need to be current at all times. The standards are under continuous review. इसकी very simple सी example ये है कि when you are setting the standard relating to the direct material, so you should always be up to date with the current market price. How much will you have to pay in order to buy that raw material? So if that figure is not up to date, obviously the cost that you will calculate subsequently will be inaccurate, because the cost related to purchasing that raw material is incorrect. Now, ideal versus normal standards. Companies set standards at one of two levels. One is the ideal standard, and the other one is the normal standard. Ideal standards represent optimum levels of performance under perfect operating conditions. So you can say ideal standard is the maximum output that you can achieve, ideally achieve. Normal standards represent efficient levels of performance that are attainable under expected operating conditions. So, from this, we know that normal standards are more realistic than ideal standards, because ideal standards is the maximum output that you can generate, theoretically speaking, if all the conditions are perfect. Most companies that use standards set them at normal level. Properly set normal standards should be rigorous but attainable. So the standards that you set should be achievable, but should require, hard work and complete focus in order to achieve it. A case study. So now, in order to determine how we calculate the standard cost of any product, we will study a case study. To illustrate, we use an extended example. Zonix Beverage Company uses standard cost to measure performance at the production facility of its caffeinated energy drink. So we have a product company by the name of Zonix, which produces a drink. Now, first we come to direct materials. The direct materials price standard is the cost per unit of direct materials that should be incurred. This standard is based on the purchasing department's best estimate of cost of raw material. So first we deal with the cost of raw material. Now this is setting direct materials price standard. So and remember, whenever we will talk about direct material, we will always be talking about the per unit cost, whether it is the quantity or the price. So the price will always be related to one unit, and the quantity will always be related to the production of one unit of that product. So the direct material is, and we also include other expenses that can be incurred while we are purchasing, like freight, then receiving and handling. So the purchase price net of discounts is 2.7. Then you have freight and receiving and handling. So the standard direct material price per unit is $3. Then we talk about direct material. Um, so the direct material quantity standard is the quantity of direct materials that should be used per unit of finished goods. This standard is expressed as a physical measure, such as pounds, barrels, or feet. In setting the standard, management considers both the quality and quantity of materials required to manufacture the product. So the standard quantity per unit for Zonix tonic is as follows. Required materials is you need 3.5 pounds. Then allowance for we, since we try to set the standards at the normal level, so we should always take care of things like wastage and spoilage. So required materials will be 3.5 pounds, and you allowance for wastage is zero point 0.4, and allowance for spoilage is zero point 0.1. So standard direct material quantity per unit is 4 pounds, and we know the quantity, the price per unit is $3. So now we know the price and we also know the quantity. And remember, the price is per unit, and the quantity tells us the total number of pounds that will be required to make the product. So the standard direct material cost per unit is you simply multiply this 3 by the total quantity per unit that you have calculated. So the standard cost will be 12. Now, similarly, we also have to calculate the direct labor. The direct labor price standard is the rate per hour that should be incurred for direct labor. This standard is based on current wage rates adjusted for anticipated changes such as cost of living adjustment. Cost of living adjustment is when you account for the inflation or the rise in prices, and you accommodate the percentage change in prices to come up with a correct price. The price standard generally includes employer payroll taxes and fringe benefits such as holidays and vacations. For Zonix, the direct labor price standard it as follows. So the hourly wage rate is $12.5. Then we have the inflation adjustment, payroll taxes, fringe benefits. So the standard direct labor rate per hour is. We know that we will end up paying $15 as standard direct labor rate for 1 hour. Alternative terminology. The direct labor price standard is also called the direct labor rate standard. The direct labor quantity standard is the time that should be required to make 1 unit of the product. This standard is especially critical in labor intensive companies. So remember, we talked about labor intensive and capital intensive. Capital intensive companies make use of machines, while labor intensive companies deal mainly with the human labor in order to make their products and services. Allowance should be made in this standard for rest periods, cleanup, machine setup, and machine downtime. Why we do it? Because we always try to go for the normal uh, targets that are set. Now we talk about the standard direct labor hours per unit. First, we calculated the rate per hour. Now we have to calculate the direct labor hours per unit. So actual production time will be 1.5 hours. And remember, this again is per unit. Rest periods and cleanup, setup and downtime. So standard direct labor hours per unit is 2. Now, in order to produce 1 unit, we know the standard direct labor hour per unit is 2 hours, and the rate per hour is 15. So we calculate it to be $30. So you will incur a cost of $30 as labor in order to make 1 unit. Manufacturing overhead. For manufacturing overhead, companies use a standard predetermined overhead rate in setting the standard. This overhead rate is determined by dividing budgeted overhead cost by an expected standard activity index. If you remember, we did this in ABC activity based costing, we did this in job order costing, and other forms of costing as well. Sonic uses standard direct labor hours as the activity index. The company expects to produce 13,200 gallons of Sonic tonic during the year at normal capacity. Normal capacity is the average activity output that a company should experience over the long run. Since it takes 2 direct labor hours for each gallon, if you remember, we calculated it here. And we know that the it takes 2 hours, and the total standard direct labor hours are 26,400 because we know the total number of gallons that we expect to produce. At normal capacity of 26,400 direct labor hours, overhead costs are expected to be 132,000. Of that amount, 79,200 are variable and 52,800 are fixed. So now we know the total manufacturing overhead. We know the variable part and the fixed part. We know the standard direct labor hours that will be required. So this way we calculate the variable cost, overhead variable cost per direct labor hour. We know the fixed cost per direct labor hour, and the total cost will be $5. The standard manufacturing overhead rate per unit is the predetermined overhead rate times the activity index quantity standard. For Zonix, which uses direct labor hours as its activity index, the standard manufacturing overhead rate per gallon of Zonic tonic is 10. So now we come to the total standard cost per unit. After a company establishes the standard quantity and price per unit of product, it can determine the total standard cost. The total standard cost per unit is the sum of the standard costs जो हमने calculate की. If you remember, it is always direct material, direct labor, and MOH. So the direct material we know is 4 pounds is required, and the standard price per pound was 3, so it is $12. Direct labor is you need 2 hours, and the cost linked to 1 hour is 15. So the total direct labor will be $30 per gallon per unit, which is a gallon bottle of Zonic tonic. Then you have MOH 2 hours 5. So the total cost you incur when you have to make 1 gallon of this drink is $52. The company prepares a standard cost card for each product. This card provides the basis for determining variances from standard. So this is your standard cost card. Analyzing and reporting variances from standard. Now we know the standard, which is $52 per bottle of Zonic, and each bottle is 1 gallon. So this is the standard. Now, how do we calculate it with the actual? The actual is that you actually incur. And as you incur the cost, you record those costs to come up with the total cost that you have incurred. One of the major management uses of standard cost is to identify variances from standards. Variances are the differences between total actual cost and the total standard cost. Total standard cost is 52, which we have just calculated, and the total actual cost is the cost that we will um, end up incurring in order to produce. To illustrate, assume that in producing 1,000 gallons of Zonic tonic in the month of June, the following cost was incurred. So the total cost that was incurred is $55,000. when we were making 1000 gallons. Though, as per the standard cost, the total cost that should have been incurred is 52,000. Why? Because it is 1000 into $52. So the standard cost is 52,000, but we incurred a cost of 55,000. So there was a variance of 3,000, and the variance is adverse or unfavorable because we ended up paying more than what we should have paid. So that is called the unfavorable variance. The 3000 variance in June is unfavorable, and unfavorable variance has a negative connotation. It means that something is wrong. Things did not go according to the standard which was calculated. And we also know that variance can be because of two reasons. One reason is the quantity. Either we ended up using more quantity than what should have been used, or it can also be because of, the price. Maybe we paid more than what we should have paid, both for the quantity, or we paid more for the labor than what we should have paid. So now we know variance can be because of two reasons. One is the quantity and the other is the price. So as we move on to lecture number 30, we will study this concept of variance in detail. For the time being, we know that we should know we have two types of variance. One is the price variance, because there was a distortion in the price, and the other one is the quantity variance, when you end up using more or less than what should have been used. So this is the end of lecture number 29. Lecture number 30, we will discuss this concept of variance in detail.